Good morning, everybody. Hey, welcome to Tuesday, May 26th. I hope you guys had a great Memorial Day weekend. I know it was a little rainy around here, but we always need good rain heading into summertime. So hopefully you had a great weekend. Hey, the market's off to a great start this morning. We'll talk about that in just a few moments. What's really driving that as we get ready to open the day. So with that being said, we're looking forward to our conversation today with Dave. And hopefully you've seen an increase in your portfolio with all this movement up. And if that's the case, now's a great time to make sure you don't have too much risk for the next downturn. So give us a call, 863-382-0037. Dave will join us here on the next uptick.
5 points. Hi, good morning. It's 8:39 here. We're at 21 before 9. Yesterday, while I was doing this thing solo while the markets were closed, I was saying our futures trading looked pretty doggone optimistic at the time. It still looks that way. We've had to have a pretty good day on Wall Street today. Why is that happening? That's why we talk to experts around this place. Let's go downtown to the offices of Statler Financial Services. Phillip Statler back on the line. Good to have you back with us, Phillip. How are you?
Hey, I'm doing well. I hope you had a great Memorial Day weekend other than getting a little wet. We had a great time. Got to celebrate my dad's birthday, so we had a lot of family in. So it was a great weekend overall, and so I trust yours was also.
I'm glad you had some time with family, Gladys, and I did a little lunch out, called it a picnic yesterday. Other than that, the rain kind of put a damper on my plans of doing yard work all weekend, so it got me out of honeydew. So I guess that made it a good weekend, didn't it?
I would say so, Dave. I'd agree right there with you.
That's it. We start out the morning with financial news, and it's rather thin because we're coming off a 3-day weekend. But one thing did catch my eye while we were talking before we went on the air. Another one of those Federal Reserve Bank district reports come out. This is the Chicago Fed, their National Business Activity Index. And again, each one of these Federal Reserve districts has their own number and their own calculation number. So how they get it doesn't matter, but the movement counts for a lot. It was negative 4.97 in March, and for April it fell to negative 16.74. I'm almost glad the analysts weren't saying they were expecting a number on that one, because another precipitous number that says we're in a world of hurt right now, aren't we?
Well, definitely are. You know, the economy is still suffering. I don't care how you slice it and dice it. Even though we're starting to move back out and spend money, there's still a lot of people that aren't working. There's still a lot of retail that's not open at all, or on reduced hours. So when's the economy really going to get full force? Because to me, that's the key. Halfway getting started is good, but it's not going to ignite the economy. It's going to stop some of the losses. Well, and mitigate some of the losses. I think everybody will still have a loss even at the rate we're going right now.
Absolutely. We were talking before we went on the air that the rationality of reaction just isn't there. The best analogy is Germany officially went into recession yesterday. So what happened? The German stock market was trading up by over 2% when I was checking the pre-market trading yesterday morning while I was here. We're sitting here with just rumors of vaccine progress, and all of a sudden the Dow is trading up and almost bumping its nose back close to 25,000 again for not really any rational reason whatsoever. Greenspan used the phrase once, irrational exuberance, and we're starting to get into that frame of mind, aren't we?
We are. Yeah, you got the S&P 500 futures up over 3,000 again. So you are right. We are seeing that, and I kind of go back to '08, and we coined a phrase back then. Hopiism. You've heard of opium and crack and those type of drugs. And a lot of times we look at that and say, you know what, this is just a lot of hope driving this market. There's no numbers backing this thing up.
Absolutely. And yes, we know we're going to come out of this. We don't know how fast we're going to come out of it. We don't know how much damage we're going to end up doing. But the stock market being a forward-looking indicator, You'd almost think there was something concrete going on right now with the exuberance we're seeing in the indexes. And the thing that scares me is while we know everything is going to be okay eventually, we also, both of us, expect kind of another test of the lows to come up somewhere as we come out of this mess. And the higher up we get on hopeism, and I like that term, the more precipitous that next test of the bottom is going to be.
You're right, Dave. And so I know that we get this FOMO, right? For fear of missing out. And so I think that is also causing people to jump back in. But I got to tell you, the big analyst firms and those type of things are really and truly, if you dig down into some of their research and some of the articles that are coming out, they are very cautious about what's going on right now. And unfortunately, I don't think the individual investors really is heeding that.
Absolutely, and I mean we don't want to sound like the big gray cloud outside the silver lining. It is good to see the markets in relatively healthy condition. It's just a function of looking at where you're at and whether or not this is the time to take a chance that you're at the beginning of a big uptick or not, and whether or not you're at an age where you can afford to take the risk on the chance you're wrong.
That's right. You're exactly right. I mean, especially, if you're in that danger zone, man, I would hate to get this wrong because, it may mean that you have to work another several years before you can afford to retire. And so, getting this one wrong can be detrimental to your retirement.
Understood. You do have a couple of reports this morning as far as quarterly indications how companies are doing, and they're kind of led by not necessarily a report, but yet another bankruptcy out there. I did not hear this. Hertz goes bankrupt. Wow.
Yeah, yes, absolutely. It was Hertz filed for Chapter 11 bankruptcy protection after they tried unsuccessfully to talk to their creditors into granting them some relief. That did not happen. And let's face it, you and I have talked about Hertz before. They've had issues now for probably the last 3 or 4 years. And they just are one of those companies that was teetering anyway. And it didn't take much to push them over the edge. Now let's see what happens. Can they come out of bankruptcy, or do they end up just kind of somebody taking them over, or do they sell off their assets? That's the next step, is to see how they handle it.
And that's another one, like you said, one of those businesses that's had some difficulty on their business plan to begin with, a full-price, full-service auto rental company up against the discounters. They were getting some pressure to begin with. It doesn't take a lot to push them over the edge. We saw it in a couple 3 department store conglomerates earlier. So it's not a shock, but it's always a surprise.
Absolutely. And so the other thing we have in news, we talk about hopeism. And so where's it coming from? Well, it's coming from the likes of Merck and Novavax. And so what's happening? Well, Merck, they acquired another privately held firm who's getting ready or approaching the human trial stage for their vaccine. And they're hooking up with another nonprofit research firm. So that's an issue where we're moving closer and closer, at least they think they are. Novavax announced the launch of human trials of its experimental vaccine, so in Australia. So we're seeing a lot of different things out there that are giving people hope. But the market doesn't trade on hope forever.
Absolutely. All of these are good news items. They certainly are. But I'd like the term hopeism. It does tend to make people do what could be self-destructive things as time goes on. So conservatism, even if you're as optimistic as I am, conservatism is always a good idea.
So the other thing, we have 2 retailers that actually reported earnings. We had AutoZone and Hibbett Sports. AutoZone, they beat the street. They came in at $14.39 a share for earnings, compared to $13.80 that was expected. Obviously, their same-store sales fell by about 1%, which was good news, though, because everybody expected it to be down about 6% or better. So that was kind of good on their part. The last I checked, they still haven't traded yet this morning, but they ended up Friday. They were up 1.6%.
They were up toward the top of my winner list on Friday in anticipation of the report.
Yep. And so then we had Hibbett Sports, and Hibbett Sports really surprised me. Um,
Hmm.
they came in and they had earnings. They earned 31 cents a share versus the 19 cents that was expected. Revenue top forecast, and I knew same store sales would tumble, and it did. Um, but it was better than expected. I mean, their same store sales were down 19.5%. Analysts expected them to be down like 34%. So,
Oh,
so they really enhanced their e-commerce sales, and really did a good job when it comes to that front. And so we saw them on Friday. They were up 3% this morning. Before we get going, they're up 9%. They're a big winner today.
wowzers! Yeah, when you first said they beat the street, I was kind of a reaction was, huh? That's a mall store. They got locked out of their stores for a long time. Good news. Setting the table this morning, when we last traded was on Friday, and it was a mixed bag day on Friday. Nasdaq had a good day. They were up by over 4/4%, up 39. S&P was up by almost 7. Dow was the exception. They were off by a bit, and as you and I have talked about, one issue can change the Dow index pretty doggone easily. So we'll call it net a green day on Friday. Mentioned it earlier. Boy. I'm looking at these numbers, and all I can say is irrational exuberance. Where are we going 45 minutes before trading starts?
We are bumping our heads up against some big numbers again today, Dave. We've got the Dow up 2.3%. That's $562. We got the S&P 500 up 2%. That's $59 and almost $60. We got the Nasdaq up 1.6, up getting close to 150 points. So everything is coming up big time when it comes to the green ink. On the other side, the commodity side of the table, we see, I don't want to say a mixed bag, but silver's up. Man, it's up almost to $18 an ounce. It's at $17.88 an ounce. That's up
Wow.
1.1%. Gold is trading down about 7/10. And then we got crude oil up 3.4%, $34.38 a barrel. I noticed gas was up about 10 cents a gallon over the weekend.
Yeah, big change on the price of gas, and it is because of the improvement of the price of crude. And I know you all that are looking for cheap gas are not going to appreciate my saying it, but for what I've been looking at in the news about the oil patch, people selling off their rigs, talking about closing them down forever and capping the wells, we could use another $6-7 in order to stop that from happening out in the oil patch. So I'd be happy to pay an extra 10 cents a gallon in order to get a big part of our industry moving again, wouldn't you?
Oh, absolutely, absolutely. I mean, because that's part of being in full employment is having that industry booming.
Absolutely. World markets, everything is green. The Asian Rim markets were real happy to see our futures. They're up close to 2% across the board on everything. And Europe continues to go up this morning, too. Midway through their day, the major indexes over there, almost a full 1% up as well. Philip, we were talking about it. I hate having us sound like we're talking stinking thinking, but conservatism counts for a lot right now. How do I plan my investments in order to save my retirement and make sure it's secure? That takes an appointment with you. How do I get that?
Dave, you know what? We've seen this huge run up in this marketplace. I got to tell you, folks, if you're in that danger zone, what is that, 10 years before you retire, 10 years after you retire? Then you definitely need to give us a call for our financial x-ray, 863-382-0037. Catch us online at statlerfinancial.com, Facebook, Statler Financial Service, where we repost this broadcast every day. And then join us for the Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
All righty. Thank you so very much, sir. We'll catch you tomorrow. Fair enough?
Fair enough, man. You have a great day.
Appreciate you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Remember that first paycheck when you started working all those years ago? You're finally out on your own.
Like Dave, I get tired of being negative, but I try to be real with you folks out there, as well as my clients, that the next downturn could be coming up shortly. Do we know that for sure? No, I don't have a glass ball. I don't have a crystal ball that tells me that's what's going to happen, but it does give you an opportunity to determine how much risk you have in your portfolio to make sure that you are in the right place for the right time you are in your life cycle. Give us a call. Let us help walk you through our financial x-ray process. That's 863-382-0037. Hey, until tomorrow, have a great day, and I will talk to you then. Bye now.